Hello everyone, my name is Chin. So as promised, I'm going to make a video about hedging. Some of you may have heard about it, some of you might haven't. So basically what hedging is all about is, for example, if you can see this line here, if the price went up to, for example, this price, whatever that is, you want to short it, okay, and you want to take profit on this profit level here, and you normally will put a stop loss right about that dotted line, the blue, and when you hit it like here and go up to this blue line, you'll hit the stop loss, and that's the end of your trade, and you're going to lose a bit of money. But instead of doing that, hedging is about opening up the opposite direction. Hopefully the price will go to the opposite direction, if you see what I mean. So you think you're going to short around here, it's not going to the take profit level, so it went the reverse way, going the opposite direction, and then you open up a long position but with a bigger loss size. So hopefully it will go the exact opposite and you'll take profit from it. And if it doesn't, then you go back to the original short position, open up one lot, so far and so forth until you take the profit. You can take a screenshot, pause it, whatever you need to do, and it gives you a guidance of what the gap is supposed to be. 60 pips, 20, 60. So according to your scale, really. And so this is how they hedge it in a very, very simple form. The beauty for that is you never know when the price reaches support or resistance level. You can read a lot of fundamentals analysis or different chart formats, patterns, whatever that is. You can never guess, or you might sometimes can't guess where the price is going to go, right? So after you have screenshot or pause whatever this graph, let's go to a real chart. So it's a US dollar yen. Might be a little bit slow because I'm recording. So what I'll do normally is to identify these support and resistance level. So how I choose support and resistance is I go to the ICE chart, and then go to the monthly, and you'll identify a lot of support and resistance level throughout the years very, very easily. Those are the footprint left for people to learn and to have the structure of the dollar yen. So the traders in this institutional traders may look into the chart and recognize that is a significant level where buys and sells going to be, that kind of thing. And a monthly chart is very easily identified. Okay. So this is how I identified support and resistance using the monthly. ICE will give you data all the way back from 1980s. So the next time frame I'm going to use will be a daily one. So let's go back to my broker. I'm using Oanda. And those are the levels. The black lines are the levels. Forget about this blue and red arrows. Most importantly, I am actually open a short when it is very close to the support and resistance, which is around about 151.7, or as I mentioned on mines, I put 2.0. So when it was very close to it, I'm gonna say, right, I'm gonna short it, right? So I put roughly £40, $40, 40 euro, whatever the currency you're using, £40 there, and I'm gonna aim just roughly halfway. So it will be £48 of profit. So where am I gonna put stop loss? We don't put stop loss, but that stop loss is from when it goes to the reverse side of it. So as you can see, I open up a short and then it just go all the way up. So if you look back to the graph I shown you before, when it goes to my long position area, so in my situation, 60 pip is 600 pips here. So when it goes the reverse of 20 pip, which is 200 pips, which I'm going to show you. So we'll be roughly here, exactly that line. I'm going to aim for the 600 pip up with a profit of £72. Okay, and I'll put the stop loss to the previous. Right, okay, so if this time is going to go all the way up to 158, how much am I going to actually get? Is it £72 I'm going to get while I put £48 into the reverse side, so £40 to go down and 48 to go up. So a little bit of maths here. So first scenario is I shorted it with, if it goes well, I'm going to get £48 minus the interest of £6.6. But now we can clearly see it's going to the opposite direction. It's going to go up. So my profit, if it hit that, it will be £42 minus the previous stop loss, which I can show you. If it goes to here, just bear with it, that will be a £64 of a stop loss. So if it is the second scenario, I'll be having a profit of £72 minus £64 plus £6 10 pence for interest and minus £6.6 interest. Because when you short it, there will be a interest rate difference. So you will pay more interest for that if you're shorting it. If you're longing it, you will have a plus interest into your pocket. So they roughly cancel each other out. And this is how I trade for this time. So this numbers here is when I'm shorting it with a stop loss to the opposite side. And this is the long scenario with the stop loss there. Stop loss is 96 because if I unfortunately doesn't hit it, go all the way back down, I'm gonna put another lot in to have a profit bigger than £96. So first scenario, if it doesn't go past the buy side, you will have £48 minus £6. You will have 42 profit. But unfortunately, it's now against me. So it will be roughly having £8 or sometimes zero profit, but you're not losing anything. So this is hedging, and let me go back to that if you still don't understand what I mean. So it's just basically, if you want it short, it doesn't reach the level, you open up to the opposite side over and over again, you increase the lot size until it reaches the take profit level. So why am I doing this? It's because of support and resistance. Especially the monthly support and resistance are being very, very accurate. If we revisit the ICE graph again, because we can't control where the price is going to go, we don't have that capital to move the price. So let this job done by the traders. We're here to see if it reaches that, I'm longing it, it's going to go to the next level, and price will always move from level to level, as we can see here. Touches it, going back down, gone through it, bounce to the next level. We never know if the price is going to go to there or not. It might drop back down all the way to 139, or it might go to 159 to 160. We don't know, do we? So let the bankers, let the institutional traders do their job, and we are going to use the hedge method to make a little bit of profit. But you don't have to listen to me. You don't have to follow me. I'm just trying to explain this kind of thinking, this kind of strategy. So I hope that will give you a little bit of insight of some hedge funds, what they do. Obviously, it's a lot more complicated than that. They will trim it. They can put more money into it, pay different kind of interest. I don't know, but in our level, this is what we can do. But one thing you may notice, depends on your platform, depends on your countries. You cannot open a long and a short position at the same time. So what I do is within the same, let's say, Oanda platform, I have two accounts in there. One is spread betting, another one is just a primary. So you can transfer fund in between, one doing a long, one doing a short. Just be aware your margins, be aware of how much balance you've got left in order not to be like close the account. And yeah, hopefully we'll reach 158. If it doesn't, it goes back down to my another side of profit taking. I'm gonna make a little bit of profit anyway, and hopefully you understand this concept. Thank you very much.